Good morning, everybody, and this is your Dow Jones day trade setups for today. So just starting off on the weekly, we had some interesting price action here around the weekly. So let's just run through. I mean, this has been 3, 4, 5 weeks now. So we first had a pretty solid close below the 155 EMA. Then we had an engulfing bar, and then we've got an inside bar, inside bar, inside bar. This structure that you see here is a pretty bullish structure. We've also got quite a few tails, and we ended up with a pretty solid pin bar off the 155 EMA. Now, at the same time, we've got a crossover of the oscillators right now on the weekly. So what we're seeing here is a potential setup for some kind of a squirt to the upside. Whether it's going to be a continuation of the original bull trend, that's still way far away before we can actually ascertain that. But it's either that or it is a pretty solid move up to come and test some structure somewhere higher up, and any one of these tails here could be tested, and then a continuation to the downside. So for now, we are pretty much range bound. If we start looking at the lower time frames, you can see the top of range is pretty much where we are now. Sorry, not quite. There's the top of the range, and it's actually a zone, so I'm just going to put both in so you can see there's the top and bottom there. And same thing with the bottom. You can see it's not very well structured, but you get the picture. Now, last week we got a pretty solid pin bar, then an engulfing bar over the pin bar. So that has propelled us to the upside. But this is the area we need to clear. Now, it is earnings season, and we are kicking off with the banks. Some of the banks and finance institutions came out last week, and we've got quite a few big earning results coming out this week as well. So I think the market's looking towards earnings at the moment to see what's going on, and they shrugged off a lot of bad data, or bad news, should I say, last week. That's something that you also need to keep in the back of your mind. So let's just look at the 3-hour. Above and below the moving averages, clear indication of a range. Oscillators all grouping to the upside. So I would anticipate some sort of a move to the downside off the top of the range here. But I'm not really keen on shorting at the moment, and I'll tell you why. If you have a look at the hour, you can see we had a pretty, how do I put it, a far move from the moving averages. So we sort of pretty much exhausted from the moving averages. Came back where you would have thought early on Friday that there would have been a rejection here for another leg down. That failed. And we had more noise come out, and then this is basically what happened. So we had this massive acceleration. So you can see here Wednesday we had bad news, CPI data, all the way down, and then all of a sudden buyers stepped in and said, CPI is not that bad, and drove it back to the top. This is just an indication that there are probably fewer sellers than there are buyers in the market. So in other words, those that have sold have already sold. The rest of the people are still holding on to their portfolios, and there are no other people that are selling at the moment. So that's kind of the view that I've got at the moment. So what I'd be looking at right now is we are top of range, so I'm looking for pullback onto structure for an opportunity to buy. And at the moment I have a zone as per both the DAX and S&P 500. This is a bit of a flag forming, looking for a pullback onto structure, which is right here. So if we can get some support around 3,900, so 30,900 and 30,973. So if we can get some support in this area, that would give me the opportunity to start looking for an opportunity to buy back into this for another leg to the upside. That would also line up with trend line that's forming here. You've got a break of the 155 and the moving averages, which hasn't been tested on the hour yet, so that would definitely be the area I'm paying attention to. If you look at it on the 15, you can see we did get a 1-bar retest of the 15-minute 155 EMA here before a pretty strong acceleration. So that's kind of what I'm looking for. some kind of a pullback, support to be found in this zone at 3,900, and that would give me the opportunity to look for longs, and not looking for anything more than a retest of this 31,388 and 31,536 area, which would be top of range. The converse of everything that I've just said now is if we break above the structure and we start finding, in other words, break, come back, find support, or start ranging in here, then break, come back and test that range, that would change the tune considerably. Then we'd be looking for longs up here with a pretty tight stop underneath the range. And that would basically just boil down to a pretty violent break of this area for a move higher up. And if you look carefully, you'll see the next logical area of resistance is going to be all the way up here at 3,200 or 32,050. So that's kind of my view at the moment. Not looking to be long up here. I want to see a pullback on structure. That's my preferred play. But if we do get above here and we do start forming a base in this area, then we need to start watching it. But that'll probably form over quite a few hours. Anyway, that's kind of my view today. Is looking interesting. Whether this is just going to be a bull rally, or sort of should we rather say a bear rally, or is it going to turn out to be something much bigger than that and break the bigger trend and then start continuing the even bigger trend, which is on the weekly and monthly, which was a pretty solid bull trend. So big pullback here with COVID, move up, and then it looking like a bit of a flag forming here, and everything is pointing to the indication that we should be looking for some kind of a squirt up. Whether it continues up is another story, but that's kind of the view that we've got for this week. Anyway, hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.